An early investor in two of 2020's biggest IPOs sees another big year ahead. Rick Heitzmann is an Airbnb and DraftKings investor. He's the founder and partner at FirstMark Capital. Rick, always great to speak with you.
Always good seeing you. Happy holidays.
Happy holidays to you. Are we to surmise that you think that the stock market, you know, the euphoria, whatever you want to call it, the momentum higher is going to continue because you see IPOs being strong next year?
We do. We see a number of IPOs getting ready to go and a number of public financings, whether that's via SPAC, traditional IPO, or even the new direct listing. So everyone feels very strong on the technology side about the coming wave of 2021 IPOs.
What kinds of companies? I mean, are these going to be the massive unicorn type companies that we saw in 2020? And what do you think is going to be the avenue of choice in terms of method of going public?
So I think you're going to see companies of all sizes going public. I think a couple of the companies people are most excited about is Roblox, a video game company. If anyone has teens, preteens, it's where kids are spending their time. It's almost like the PG version of Fortnite. It's going to be a massive company, $10 billion plus. On the enterprise side, we're going to see UiPath, which is kind of continuing the drumbeat of AI, come out, and that'll be a $20 billion plus company. And then you're going to see a lot of the other enterprise software and consumer companies coming. But I also see, to answer the second part of your question, traditional IPOs remaining strong, and they'll have a majority of the market share. But if you look at the number of SPACs raised and how some of the other companies have really performed in the SPAC market of Opendoor and DraftKings and the like, I think you're going to see kind of those super premium companies taking time. And in every private company boardroom today, folks are taking their time, being thoughtful about how they go public. So the SEC just changed that you could raise direct capital through a direct listing, so being able to offer primary shares as part of that. And obviously, we've talked a lot about SPACs, and I think every single premium company is thinking about how to tell their story better, and SPACs are definitely the best methodology for that.
So, Rich, I have a question for you. You're clearly a visionary, and you're a very early investor in Airbnb. And I think I certainly watched in awe, and so did the CEO, Brian. That IPO was extraordinary. Yes. And I had to double click on that because I thought, what am I missing? How is this worth more than every listed hotel when it doesn't even own a hotel? And I had to think, and I said, wait a minute. It enables me to experience places that don't even have a hotel. And this is creating work from home to be work from any home. And, 28-day stays is very different from a hotel. So my question is, where is the next Airbnb? Like, what other sectors are ripe for that kind of disruption?
So you're talking about some things in marketplaces around the sharing economy that Airbnb is really the pinnacle of marketplaces that you've seen with companies like StubHub, Airbnb, Upwork on the enterprise side. The next wave of innovation we're seeing is on the healthcare side. And as healthcare is one of the biggest sectors in the economy, we're seeing more healthcare companies going direct to consumer, offering pharmaceuticals, offering care in home. And we think that's going to be a great opportunity going forward. In addition to that, we've begun to see some real estate companies doing very well. Opendoor, which went public through a SPAC, is now a $20 billion public company, which is changing the way people buy houses. And then we've always loved video games. We saw Roblox is coming out. We've seen all the video game companies perform regardless of up market or down market. So you look more broadly across those sectors. Those are the companies and some of the leaders we're going to be seeing in the public markets in 2021.
Hey, Rick, it's Dan. Obviously you started out this conversation by saying how bullish you are about some very innovative private companies coming to public markets. You just mentioned marketplaces. You mentioned a lot of consumer-oriented names. How do you make sense of some of these enterprise software valuations that we've seen that have come to market either by direct listing or by IPO this year? These are less sexy names for some of our viewers as far as knowing their products and services, but you continue to see some of these SaaS names trading at ridiculous public market valuations going forward.
We're seeing the SaaS names come public. We're seeing the transition, and we're only probably about in the third or fourth inning of the transition to the cloud. So although IBM is buying ads for the last 5 years, the actual implementation of the cloud is only about 30, 40% of the way there. And with that comes a whole new data infrastructure, a whole new set of both open source and enterprise software tools So especially things around data, and we look at some of the biggest companies in data of DataKin, Databricks, DataHiQ, and DataRobot, all of which will be IPO targets in the coming 18 months. And although, it's hard to see what those enterprise multiples will be, I think people are betting on a fundamental shift from kind of the legacy infrastructure into the cloud-based model.
Shepard Smith here. Thanks for watching CNBC on YouTube.